Hey, let's take a look at Amazon. It's been about 10 days since we looked at them. Amazon always has a lot going on with them. There's definitely a handful of news items that we're going to cover. There's also one interesting thing I'm going to show you that I'm assuming it's a mistake, but when you see it, let me know what you think about it. But uh, yeah, so we're going to go through the news and then we'll shift into the technical analysis. I believe on the 13th it was trading at 138. Now it's at 135. We'll see if that's a good buy point or what is a good buy point for this one. So let's go into the news piece here. Uh, there we go. So Amazon, they have this devices chief, David Limp. He's going to retire. There was retirement just at I think Tesla, not too long ago. Same type of position, high level. But he was in charge of this division. Amazon has cut jobs in the devices, services, and gadgets division, which he was in charge of, as part of its planned 27,000 positions layoff in recent months. So that division's more like the Echo. Uh, so we'll see how that kind of plays out. It sounds like that was the division that was maybe not seeing the best results or not the expected results. So um, we'll just see how that goes on. This was pretty nice to see. So Amazon, they're starting this pharmacy type of service line in their under their Amazon umbrella. Um, and when I say new, I mean it's probably a couple years old. It looks like since launching its healthcare business in late 2020, so a few years now, announcing this month that it had doubled its active pharmacy users over the past year. So that's a nice highlight. I didn't pull the income statements, but this is clearly going to be a very small segment, so we can share that probably soon. But I think we just covered their financial statements, so by all means look at that. Uh, and this was also kind of doubled with there was this announcement that Blue Shield, at least in the state of California, they're now switching it up. They were using, I think, just really CVS, and so Amazon's coming in and they're going to kind of Blue Shield's going to piece it out now instead of having it all under one, I think, CVS caretaker. They're now going to have a piece still stay with them, but also now a piece with Amazon. So that's nice to see. This is actually picking up for them. This was seems like a good move for them. Next, we have Amazon's considering a major change. Says it will ramp up efforts to increasingly shed those ubiquitous brown box packages. I have no idea what they're talking about with this. My mind immediately went to like some sort of shrink wrap plastic that's durable enough that it wouldn't like rip. But not sure what these packages are gonna come. Like if I order something, how is it gonna like? What am I gonna see? Just a thing in bubble wrap or? Uh, so I'm curious about what that actually looks like. But it looks like this is an effort to probably cut costs and work on the green environment, like the recycling thing. I'm not sure. But again, very early stages of that. We also have Rivian, so one of Amazon's uh, offshoots. So Rivian, one of these EV companies, Amazon owns 17% of Rivian, which has increased its guidance over its last earnings period, guiding for double the output in 2023 compared to 2022, also showing signs of reduced cost of sales, further expecting positive gross profits at some point next year. We also see this Temu shopping app. Uh, Again, very early stages, but this is a potential competitor to Amazon. So potentially that could be something that we're probably not going to look into, but that one, if they mirror Amazon, we would kind of want to see the same type of growth if this was, say, Amazon maybe 5 to 10 years ago. It all depends on what stage they're at, but they could have the same type of storyline as Amazon, and all. And as we know, Amazon's one of the top companies in the world. So this has potential for that. Not saying it's going to get to that point, but there's always potential for it. Moving on, we have Amazon loses key backer 4 years into a plan to eliminate carbon emissions. So I I'm hoping this isn't a big deal, but it is a big deal in the moment, I suppose. So Amazon currently has a goal of zero carbon emissions by 2040, and it has not made or obtained proper progress towards that goal, which was set back in 2019. And apparently, this company who backs companies who are actually following through, they took it away because of that. Amazon's working things out, but the real impact of that is certain companies, potentially like ETF funds, will pick companies that are on this type of companies list because they're good for the environment, and people want companies that do that. And so Amazon being taken off of that list, the longer they're taken off the list, the higher likelihood they might get cut from ETFs due to this one reason, that and they are not labeled as an environmentally safe company or progressing towards it. Um, so there's potential for that, but we'll of course see. Amazon launches AI generated product review summaries. So they're just going to, I guess, after a product maybe gets, say, 10 summary reviews or just reviews on a product, this can summarize kind of the gist of what everyone's saying. Uh, I kind of thought this was already a thing, but I guess it's going to summarize it into a paragraph as opposed to highlighting key words. So, again, not sure how much that will impact revenue or anything, but it's just something new. Apparently, Teamsters add their heft to dozens of Amazon delivery drivers. This one's not really an issue, but it was interesting. Uh, Appears to be a delivery service provider issue and not an Amazon concern. Uh, Amazon's kind of outsourced their delivery service for multiple items, it looks like. And so people are complaining about certain delivery service providers that Amazon has hired, saying that they're just not getting paid enough. And I, it seems like they need to complain to their department or the company, the delivery service provider, and then they would need to say, "Hey, Amazon, we need to up our charges." So they're skipping a step here. So I don't think it's a concern, but maybe down the road we're going to see these type of charges, their cost of expenses tick up a little bit, which kind of happens over time anyway. Moving on, we have Amazon is a target of disturbing new claim from employees. Uh, Not sure how big of an impact this is going to be, but apparently OSHA found that the online retailer endangered the health of its employees. Over a 6 month period, staff that had serious injuries were put back to work and not brought to doctors, which potentially led to longer term pain. They also said that 8 of the on site medical representatives faced direct pressure from managers to ensure that there weren't too many workers that were being sent to doctors to receive appropriate care. Uh, Hopefully, this is just, you hate to say things like that, but it's hopefully it's just a quick settlement. In terms of an investor, I'm not sure how serious this is. I'm imagining there must be a fine. It's, of course, how much is that fine? And uh, potentially this manager, whoever kind of said this, who is being quoted, potentially could get fired. Um, I don't think it'll be a big thing again. For such a large company, it shouldn't be more than a small fine in comparison. But, we'll see as this progresses. Amazon might be facing one of the stiffest challenges, so authors and booksellers are asking the Justice Department to investigate Amazon, both for its monopoly as a bookseller, but also for its influence over the market, in that it has the ability to push certain books over shorts. I don't think this is going to get tagged into it, but they're in this FTC case about monopolies over certain industries. I don't believe I've seen what those industries specifics are. Potentially, books might be one of them based on if this case was kind of brought up already. So it might already be rolled up into it, but if it's not, I think it's too late. Potentially another round to consider and worry about a little bit, but uh, just kind of this might be an example of what those silos are. Book selling might be one of them. Uh, we also have Amazon imposes new fees on sellers who ship their own products to customers. Effective October 1st, the company will get a 2% cut of every product sold by merchants that are members of Amazon's Seller Fulfilled Prime program, or a minimum of 25 cents per item. They suspended enrollment in the program a few years ago, saying it wasn't delivering the same high quality experience customers expect from Prime. So I guess this is their way of balancing that out. We also have Amazon looking to amp up its TikTok-like shopping feed, has called on influencers to make hundreds of videos apiece, but it offers $25 a pop. Challenge for Amazon is to create content that can compete with TikTok. Creators are eligible for commissions if their work leads to sales. Uh, I dug into the article a little bit. It didn't seem as bad. I think Amazon said that there's maximums to what they're willing to do. And so if someone did the maximum amount of videos to get, I imagine, the maximum amount of money, it equates to $25. But I'm guessing that there is probably some sort of different levels and different outreach type, but that was kind of the math. So it does kind of look bad, but I don't know. They're just trying something new here. They're also relaunching shipping service that will compete with FedEx and UPS. Already provides shipping to merchants who use its storage and delivery service, which is Fulfillment by Amazon. But now Amazon Shipping allows sellers to use the company's delivery services without storing their products in its warehouses. Interesting, because we mentioned that other thing about shipping. So it looks like they're going to try to take that over, or at least be a little more, um, not outsource this piece. So very interesting to see that. Hopefully they can save costs by doing that, but we will see. And so this was the curious thing that I mentioned earlier. So here's the earnings that are currently, or what the analysts are saying, and this is on Yahoo Finance. This is what it shows right now. So there's a little mistake here. This should be 65 cents. And then just look at these numbers here. We have 129, we'll just say 130 billion in revenue and 53 cents for this quarter. And we'll just look at that for now. This is what it was when we last looked, 58 cents and 141. So a big difference here, and it goes down the line. It's not just this quarter, it's also next quarter, going from 152 down to 152 from 166, going from 66 cents here to 61, and then it even goes into next year. I'm not sure if this is a mistake, and I say that because this one I believe is correct, where it was 10 days ago at the 141, because here's their guidance. They're telling us 138 to 143, picking 141s right down the middle. So I'm not sure what's happening here, if we're going to see some sort of adjustment. Because again, based on that news, I didn't see anything that would change revenue. Things that might cost more, potentially. But yeah, I'm not sure if they reverted this back and for some reason changed earnings per share. But yeah, if you have any idea, right now I just think someone maybe hit the back button and so it like shifted back but kept the titles. Just looks like a mistake to me. But so we just looked at the guidance, but down here, so this is where we left off. Amazon was trading at 138. We had a buy point at 129. That's what we were looking for, with resistance up there at 167. Also noting the short-term uptrend since January, and to buy the dips. So let's look at the technical analysis. So here we are. at about 135, and no need to change anything. Nothing's gone out of whack here, at least so far. Um, Buy point, we're gonna go with 129. Uh, that's where there's been some support, or I guess a little bit of consolidation here, going back about a month, 2 months almost. And but otherwise, we're staying in the upper half of this uptrend. We're now in the point where it dipped below, in between the blue and the green segment, but it's already kind of inching up. So for right now, I still think it's within reason to hope for 129. Not sure if that would happen, but that's the point we're looking for. I do have 135 as a potential spot, uh, mainly because, again, it's been trading in that upper half between the blue and the red since June. So potentially that is the dip. That's the best dip we're going to see. I'm going to risk it and kind of wait for 129 or just a better buy. Um, but yeah, I mean, I wouldn't be upset if someone just said, here's a share at 135 because there's definitely room to grow. Resistance, the main point for me was 167. If we scale out, that's kind of like previous highs where it consolidated in 2020, 2021. Um, Outside of that, it's the top of the range, which right now I'm having it at 142. So that would be a spot where I'd be like, no, I don't want to pick this up. I want to see it pull back. But otherwise, 167, I don't see much resistance in the way of this. Yes, it's going to take time to get there, but I I don't see much resistance in the way. So those are the points. Um, so just a quick recap here. Amazon. So I did move it down to blue, so it's a fair value in my opinion. But just a quick recap. So again, now it's at 135. I'm looking for 129. Wouldn't be opposed at 135, but 129 is what I'm looking for. Resistance up there at 167. And then again, that short-term uptrend since January, that's still in play. So we're looking to buy the dips. Might add a note in there that it's taken a step up since about June, like the first week of June. So we might add that note in there before we check back in. But yeah, so that pretty much wraps this up. So if you have any questions, of course, ask or comments. I'd be happy to read that. Otherwise, please like, subscribe, and I'll see you on the next one. Bye.